Hello. So, morning, guys. Morning. Welcome to the channel. So, today we'll go through the last week's price action on NQ and ES. So, let's go. And we'll potentially look for the high probability setups on NQ, looking for a high probability SMTs with ES. Let's go. Here's Monday. So, this is your daily volume imbalance. Let's mark the previous daily low and daily highs. Major sell side and mean threshold of daily order block. That's how I mark my charts. 4 hour, 1 hour. So let me turn off this indicator. So for the Monday, we can see there was a very nice sell-off on ES. This 1 hour fair value gap. Relatively equal lows. So here we can see on this range, the sell-off. Price came back after Sunday opening. Price came back to above the equilibrium, and after that a clean price action for the sell-off to take the lows, previous daily lows, and ultimately our daily objective for the sell side and daily volume imbalance. Let's go down to 15-minute. As I only trade between 9:30 to 11, we'll look for high probability good setups in that time, especially in macros 9:50 to 10:10 and 10:50 to 11:10. I don't trade PM session, just AM. And so this is a 1 hour fair value gap. We can see this buy side which got taken, and we can clearly see a market maker sell model. That's unlocking the market maker models will unlock the market for you. That's a saying used by ICT. So this was the buy side of the curve, this was the sell side of the curve, and this smart money reversal. So this whole thing was market maker sell model. High time frame key level PD array got taken. We can see this fair value gap on 15-minute. Then a nice sell off to along the way. Taking profits on logical level on these lows are must, because partials are 100% profit, and we gotta pay the trader always. That's the biggest thing I learned from ICT. Equal lows, we know algorithm hunts for equal lows, and overall price went to daily volume balance. So let's go to 5-minute. So 8:30. So this was the data low for the 8:30 news, and I mainly look for 2022 model on ICT's 20 free playlist mentorship. He did a 2022 buy side, and this was the 15-minute fair value gap. As we can see, this candle, this 5-minute candle, high, low, low, higher high, lower low. So this candle was the breaker. And this drop was with the NYSE open. I wait till around like 10-15 minutes for the 950 macro to take further positions. Let's see. So these low are also the Asian lows, and I love to target when like the London highs are taken, target London lows and London Asian lows. As price almost left equal lows over here, after equities open, when price came back. So when I see this good displacement, right? So let's measure this leg. Price came back. What is this? ICT's optimal trade entry, 61 and 75, and there's a breaker. So this was a high probability trade for the shorts. Market maker sell model. We are above equilibrium, and that's how you create a narrative and a high probability trade setup. On my live executions, you can see I took a trade over. Uh, I took a trade over here. My stop was around here above the candle, and I targeted these lows for 70 60 70 60 handles like this. So that was a very good trade. On the low time from the 1 minute, what we have to understand is many times I saw before equity open, if buy side or any kind of liquidity is already purged and some kind of market structure shift has happened, so we can see this quick run to the downside. But I try not to participate in that most of the time. Because after in macros, there's very I'm not I don't want to say easy, but a smooth rally happens, which I love to take part in. And so we can see this 5 minute breaker, this 15 minute very gap. Let's mark the macros. Here's the macros. Turtle soup. This fair value gap, and overall this breaker. So, and let's check ES. Because SM because every time, most of the time, I try to take a trade with SMT, which gives a high probability for me. 1001. You can see turtle. This is turtle soup. Failure swing. Then straight drop to the sell side. There is your SMT. And this small little SMT on 1 minute over here. If you didn't took a trade over there on the breaker, you can take an entry on this fair value gap 1006. Also ICT silver bullet. This is the rule I use for engage: liquidity taken, market structure shift, displacement, market structure shift, fair value gap, order block breaker to enter, order breaker, opposite liquidity to target. And we have this liquidity, we have London lows, we have Asian lows, and we'll try to target low hanging fruit. You go short in this breaker, in this fair value gap. Your stops above this candle, around 20 handles, and equal lows. You can your first partial over here under these lows, and you can let it run till London lows. 1 2 3 and 62 handles. Also took this trade live, and there's live execution on my playlist, and please go watch, give a like, and overall price just melted down to the previous daily low. That's all I look for, a high probability one setup a day, and I'm done. That's all you need. All I aim for like is 100 handle a week, and that's golden, man. 2 3 setups a week, and that's golden. We can see a very nice market maker model over there. And this was the trade I took. Let's go to the next day. Give me a second, guys. Need some water. So let's mark previous daily low. Overall, I was expecting price to come over here to fill this imbalance. Which it did. But because of the big drop on Monday, as expected, as ICD teaches, Tuesday, small range day. And it's not like we can't trade small range stages. We can, but we gotta be very careful trading them because oftentimes we have high resistance liquidity runs in these small ranges. So there was the 9 a.m. candle, 10 a.m. candle, rejected before going to fair value gap, came back, touched the previous daily low, and again, boom. See, again, price was unable to attack the imbalance, came back, and as ICT teaches, anytime there's a daily objective, uh, obvious liquidity pool as this one of fair value gap, right, is unable to attack in the AM session. So what we have to do simply, let's go on 15 minutes. Simply wait for the PM session, and price will oftentimes will take a sell side liquidity as taken over here, and there will be a market structure shift, and you can then take and that will be a low liquidity resistance from to the objective. See, like over here. So let's look into. So in the 615 candle, it's already took the sell side. We have a sell side over here, buy side. Order block. Equal highs. Equal highs act as the best liquidity target. Let's go for 5 minute. CIST, change in state of delivery. Order block. Sell stop. Sell side taken. On 3 minute you can see immediate rebalance when this wick and this candle touch the wick, and then we can see a nice run to our objective. Let's go 1 minute. Also we can see London took the Asian low, then made a new high. New York session came back to around 50% of the London session, took the liquidity sell side, made a market structure shift, fair value gap, and then ran to take the London highs. Overall, I wanted price to see a quick displacement above over here, but after taking this buy side, price just rejected and came back down. That's why partials are really important, guys. We can see a fair value gap over here. $9.30 opening. Didn't do anything. Touched the previous daily low. Took the sell side once again. Touched the order block. And dig deep into this fair value gap. And this is your total soup setup. Total souped over here. We have this breaker, and there's buy side over there. So you can, after you've seen this displacement, let me mark my favorite macros. $10.50. This candle is $9.50, so we know the macro got started, right? So there were two things. Either you can enter on this fair value gap, stops on the slow, target buy side, overall ultimate over here, you can take partials, or second, when you see price closes above the breaker, when the next candle touches the breaker, then you can enter. But if you take a trade over there, what I will do, I will just keep my stop loss over here below this candle, because price can still come back, mess around on this breaker, and then go to the objective. So I was basically looking for this, something like this, but I closed my position around like 50 handles, I guess. and you can see, and over here 1 to 2. So you can see price made a nice run and almost get to the objective, right? But this is the time when new traders or people got scared when price come back. No, it just come back to accumulate more longs. When I start thinking like this, ICD taught us, and my whole like trading changes, right? Because that's a very big mental thing you start implementing your trading. You can see this inverse fair value gap. Let me change the color of this. So price came back, take into this breaker, block, gain, gone up. This overblock, price made support on this, and then a nice run to the objective. So overall, it took around 20 minutes to get 50 handles. And that's amazing. And I did took this trade on live. You can see the execution, and my trade was like this, something like this. And again, there was a sell setup, but my objective was this, so I don't want to counter trend my idea. And what basically happened after this run? Price basically came back to optimal trade entry area, and here's your 1050 and 1010 macro. High, market structure shift, price left a favorable gap, and buy side. So this was a still choppiness, because NQ, if is on a low resistance liquidity run, it can give you like 70 handles really quick, but it took you like 10:51 to 11, almost to 1 hour. And I just took this trade and got content, and you gotta be content with your trading, guys. See, this inverse fair value gap 1057. The fair value gaps made in macros and in like early AM session are so important. They go a long way even in the PM session. See, example. Last hour macro. That's your last hour macro. And let me check if there was a SMT for the yes on Tuesday. So here's your SMT with ES. Failure swing. Price going back and took the buy side over here. 1016 candle, and this is 1016 candle. So when you see on ES price rejected after taking the buy side and then displayed higher, cut your trade or move your stop loss to at least around this lows. So this was a high probability trade setup. You can at least get a good high probability trade setup a day. If not, maybe 3 setups a week, which is more than enough. I tell you, all you need is 50 to 100 handles a week and you're good. Even 50 candles a week is amazing. See, the setup alone yielded you 45 candles. One setup. How much? 20 minutes? Same with Monday. It was 70, 60, 70 candles on Monday. Let's go to Wednesday. Oh, straight drop. Previous daily low, previous daily high. 8 a.m. candle, 9 a.m. candle, 9 a.m. candle dig into CE of this wick, rejected, breakdown, mark structure shift. I'm pretty sure this wick. So this is your immediate rebalance on 1 hour, and that is a strong algorithm signature. Price will drop and took this sell side and almost just dropped. On Wednesday, while live trading, my bias got wrong and I took a sell. I'll show you where I took a loss. My bias got wrong in it because I want price to take the previous daily high. Where I got wrong, I'll show you. So the thing I didn't notice on Wednesday was this 1 hour wick. Whenever I've noticed, whenever there's a strong rejection from a price near previous daily low or previous daily high, it means price is rejecting and reversing. And after this candle 9:45, it closed below this low, swing low. It clearly says sell. See, breaker, touch this candle, touch the breaker and drop to the sell side. Another sell side. Almost took the completed the whole buy side of the curve. Sell side of the curve. Market maker model. There was your, and this was your smart money reversal. Higher time frame key level, displacement, and on the 15-minute inversion fair value gap close below after 9:30. Price is showing willingness to take this outside, and after that price just dropped. Let me see on ES where was the on the ES we can see clear SMT. So from this range we can already see prices in premium, and we have to short and premium, right? And we can clearly see this is buy side of the curve, sell side of the curve, smart money reversal, time of the day, and so So this was London lows, and at the end Asian lows over there. Let's study the price action on lower time frames. So this was the 930 candle. Price went up. You can see how price closed below this inversion fair value gap. And this 5-minute is your change in state of delivery, CISD. 3-minute, we can see this 945 on this order block are respected. And the sell side. Sell side. So if you just want to look on a major one, so we'll take this, the London lows, and we can ignore this one. See, even all lows and all highs, they also act as a PD array for price to respect them, and we can clearly see price respected this all low and drop. All low, price came back, closed below, respected, and dropped. See, every time price gone up, drop. Let's mark the macros. Macro will give you high probability setup. So we can see a SMT drop. Again, rules. Liquidity taken, market structure shift, displacement, fair value gap to enter, opposing liquidity to target. So we can, over here, we can see two fair value gaps. Let's go to the low. Price came back to equilibrium over here. Even if you missed the setup waiting for the 950. High, low, high, lower low. This candle is your breaker. To make a trade setup at least 2 hours, you can either enter on this high and fair value gap to be on a safe side, because this high can be turtle soup, keeping your stop over here and targeting this low, making a 2-hour trade. Or if you did enter over here on 950, your stops above this candle and target London lows, 2-hour trade. And if you trust your higher time frame bias, you can even hold, because you know this is whole market maker model, right? Take partial and let the trade run. Even see 100 handles. Even if it took over here, that's 50 handles. You risk 23 to get 50 handles, which is a very good trade. And I did miss the setup. It was in the macros also. So the thing I took a loss on was when I see this London lows got taken. Non-London lows, this low got taken. There was also a 15-minute low. I see this inversion gap. So also I got taken one more time. Displacement. Market structure shift. Order block. I took a trade over here and I lost like 30 handles, and I was targeting this to make it a 2 hour. And over here, I was like, oh, okay, got saved. And over here, uh, price closed above inversion, and now we should be good to for the also there's a macro. But thing I didn't notice was previous daily lows was behind me, and we were in a market maker sell model, and where was our ultimate objective, the sell side. So this trade was a low probability trade. Why? Because we were in a market maker sell model. Our objective was almost near, and I was spying over there. And also, let me show you one more thing. On the ES, there was a similar fair value gap. You can see that price never closed above, and this thing just act as a SMT. Closed below this fair value gap, and a quick run for 65 handles on NQ. There's what I took a loss, but there was the logical trades. Can enter over here, can enter over here, stops up above there. If taking a breaker, stops over here, attacking sell side. And I'm not interested after that, like one move is done. Let's go to Thursday. Thursday was a good day. Previous daily low. Mean threshold of this. After daily order block. Let's go to 15-minute. So we can see on Thursday, you can see with the NYC open, price just drop. I see when there's a objective like previous daily low, and there's daily order block over there, down there with NYC open, most of the time there will be a quick drop to the objective. After that, with the 10 a.m. kind of, there will be a reversion. Give me a second. We can clearly see equal highs by side. Let's go on 5-minute time frame. $9.30 opening, a huge drop, freaking 65 and a drop, almost 100 and a drop from there. Price reversed. This was a SMT with ES. And now this, my friends, is a sell side of the curve. Yes, buy side of the curve. Smart money reversal. Let's go on 1 minute. So this fair value gap, you can see. Name mark macros. This last macro just tagged the buy side. So over here we can see a nice good displacement to the outside, to the upside. Price came back to this fair value gap, and this candle is your change in state of delivery. Last time goes scans do. Also, if you look on Fib, after the expansion there was your OTE level. Price came back 1003, closed above previous daily low. When this price did that, also price took these low. Here's your total soup trade, but you gotta put your stops behind this low to target this. Turtle soup. Price closed above this fairway gap. You can either wait price to come back to the fairway gap, this candle low, target the buy side while taking partials or logical levels, or you can even close your whole trade over on this buy side, 100 handles, or you can either take entry when this candle closed above and touch the previous daily low, because previous daily low and previous daily high used in a right context are very deadly PD arrays. They are very strong PD arrays, because see, over here it failed because price just went back to the optimal trade entry area, to the change in state delivery CISD, and once again took the sell side. Market structure shift, these highs, and this was a really nice trade. This is your ICT silver bullet, risking 26 handles to gain 90 handles. Even the NYC high, if we take top here, 60 handles. Very nice trade. And I did also took this trade live, and I did hold the trade till the buy side and took partials over there. You can check the trade live on my live execution. So this was the trade. SMT with ES, close above, clear objective, and there you go. And let me show you this. When you can see the buy side, the main objective is not tagged, and you can see in my execution, I put my stop loss over there behind this low, and after I see this candle closed above, I put my stops right over here because I want to see the 1050 macro just push aggressively and take the buy side. And you can see I was just about to be wrecked by 3 points. Price touched the fair value gap and boom. See how it closed above the fair value gap is a good sign the price is in fact giving you signatures that your trade is viable. Let's go to Friday. Oh, Friday was a heavy sell off. Stay the order block. For the Friday, what I see on the oh 9 a.m. candle close below. For the Friday, what I see before AM session in the London and Asia session, they rally up, created up the buy side of the curve, smart money reversal, SMT, market structure shift, then completed the whole model till the sell side. So this what I saw. And let's see the SMT over there. Over here you can see clear 945 SMT prices in premium. We can see a clear market maker model. A narrative is set, and let's see the London lows. So here's are your London lows. Equal lows right over here. And you can see this 5-minute order block price pump into before going down. On 3 minute. On 3 minute we can see. So what I was looking for, we can see this 1 hour order block, right? Let me go to 1 minute. So when I saw this low and order block over there plus SMT see, I saw there was a buy side to be tagged on ES and price made this SMT. See the time 10:46. 10:46. Analyze this inverse fair value gap. Immediate rebalance. This low got turtle soup. One hour order block. Our realized price will go up and take the buy side. But as I see as taking the buy side, this was my trade. price closed above inversion, and also it was before macros. I took this trade with stop loss below this over here for 20 pips or 20 handles, and I did target the previous daily low for 50 pips, 50 handles, and it happened like 3, 4, 5 minutes, like this, 1 to 2, more than 1 to 2, I guess. Yeah. So there was the live trade I took, and I also posted in my live section. You can check. And after that, I didn't hold till the buy side because I knew price will reject and do something else. And but that was a good quick trade if you want to take. Also, we can stretch this fairway gap to over here, and we will look into the, let's mark the macros first. So here's your 950 10 macro SMT, bump into the order block, displaced on this leg, price came back to equilibrium. Let me see on a 3 minute or 5 minute, was there any overblock of fairway gap? Okay. So price closed below this 3 minute inversion gap. Ultimately went to the upper end of the fairway gap, the premium fairway gap, which is okay. That's why we let our trades breathe. And let me show you something with ES. So when price took the buy side, 1001, 1001, failure swing. This one is a failure swing. Close below the fairway gap. That's when you see this fairway gap. Or even you can still use this one. Price closed below this candle, 1002, and this is your ICT silver bullet, targeting the sell side. Where is the sell side? London lows. You can either take a trade over here on 1001 or 1003 when it closed below this fairway gap and touch back over here, and you can put your stops on this high, swing high, and target the lows 1 to 2, 64 handles, and it's just ran amazing, 100 handles. This is a high probability trading. SMT premium trade setups work when there are proper narrative behind the trade. So there was a good week, and yeah, guys. That's it. Thank you for joining. I hope so you learned something. Take care, and good luck, good trading.